Welcome back to our channel. Today we're diving into the basics of capital markets. So, what exactly are capital markets? Capital markets are platforms where financial securities and assets are bought and sold. These markets play a crucial role in the economy by enabling companies to raise capital. There are two main types of capital markets, primary and secondary. The primary market is where new securities are issued for the first time, like an initial public offering. The secondary market is where previously issued securities, like stocks and bonds, are traded between investors. Now let's talk about some key players in the capital markets. Investors, such as individuals and institutions, provide the capital to purchase securities. Issuers, like companies and governments, issue the securities in order to raise funds. Investment banks, brokers, and exchanges facilitate the buying and selling of securities in the capital markets. Moving on, let's discuss some common types of securities traded in capital markets. Stocks represent ownership in a company, while bonds represent loans made to entities. Derivatives, like options and futures, are financial contracts based on underlying assets. In capital markets, there are various types of orders you can place when trading. For example, a market order buys or sells a security at the current market price. A limit order sets a specific price at which you are willing to buy or sell a security. Now that you understand the basics, let's touch on the benefits of participating in capital markets. Investing in capital markets can provide the opportunity for capital appreciation and income generation. It allows individuals and institutions to diversify their portfolios and potentially achieve financial goals. However, it's important to remember that investing in capital markets comes with risks. Market fluctuations, economic conditions, and other factors can affect the value of your investments. In conclusion, capital markets are essential for companies to raise capital and investors to achieve their financial objectives.